नहीं दिखेंगे.
Welcome everyone. Thank you for joining in today.
Okay. Hi. Good evening, everyone. This is Komal Tyagi from Team Taxmann, welcoming you all to today's live webinar, Automation of Process Under Customs, IGCR Rules and its Impacts on Importers. I would like to start with a brief about Taxmann. We are the leading publisher of tax and corporate laws in India. We maintain the largest and the most accurate online database on income tax, international taxation, GST, company and SEBI law, IBC, FEMA banking and NBFC, competition law, accounts and audit, and Indian acts and rules. Over the years, we have worked strenuously to offer the solutions that will continue to help you grow your practice, and our 6 decades of experience in the domain has helped us to constantly innovate and enhance our services and take the tax practice to a newer height. We have also developed the national website of the Income Tax Department, and we maintain it with the help of our technical team and the editorial. I welcome our speaker for the evening, Ms. Poonam Harjani, Project Lead, Taxman Advisory and Research Support Services. Poonam has over 15 years of experience in indirect taxes. She has been extensively involved in advising multinational and domestic clients on optimizing their supply chain from a tax perspective by tax modeling, including strategic inputs on tax controversies. She has a wide range of experience in multiple sectors, including e commerce, IT, hardware and software, telecom, capital goods, power, etc. Thank you, Ms. Poonam, for being with us. Before we proceed, we have to share a few tips for the participants. Your mic will be on mute. However, you may post your questions in the chat box given on the right hand side. Your questions will be answered by the speaker during the session or after the session by R&D team, and a copy of the presentation on the subject matter shall be sent to you in email for your future references. Now, without taking much time, I request Ms. Harjani to address the audience. Over to you, ma'am. Thank you.
Thank you everyone. Welcome to this webinar. So, the custom duty exemptions and concessions in several cases are subject to end-use conditions. By end-use conditions, we mean that the importer, when they import the goods, they use the goods for the purpose that they mentioned they will be using it for, and the customs duty exemption is based on that condition only. Now, for the customs to ensure that this intended purpose is the very purpose for which the importers used the goods, there is a procedure laid down under the customs import of goods at concessional rate of duty rules. For short, we will be referring to these rules as IGCR rules in today's webinar. The customs duty exemptions based on end use are available both to manufacturers as well as the service providers. Therefore, the rules also apply for both manufacturers and importers as well as the service providers. So far, the process that is defined under the IGCR rules is manually driven. So all the interface and correspondence that happens of now manual. From 2022 March 1, the government intends to automate this process. And there are certain amendments also introduced under the IGCR rules. So today in the webinar, I'm presenting to you the automated procedure and the new amendments in the IGCR rules. Before we get into deeper contents, let's look at how the IGCR rules have evolved over time, right from 1996 when they were first. After that, we will be covering the procedure that is to be followed under the IGCR rules. We'll be covering those in two parts. One, the pre-amendment rules, and now we will be covering the post-amendment procedure. I apologize for the technical glitch. So I would again take you through the table of contents of today's webinar. We'll first of all look at the IGCR rules, how they came into being, and how the rules got through various amendments over time. Having done that, we will look at the pre-amendment and the post-amendment procedure in the IGCR rules. Then we will be talking stepwise how the automated procedure looks like threadbare. We will also be covering some of the important aspects of the amended rules as well as the procedure which has been notified, which would include the time limit for utilization of goods, the procedure for re-export of goods or clearance of goods for home consumption, how the process needs to be followed in case of job work scenarios, the accounts and records to be maintained, some of the transitional aspects. And towards the end, we will be summarizing by making a comparative of the old with the new IGCR rules and sharing with you some of the points which are still open and require further clarity from the department. Like I said, the IGCR rules are fairly old. They came into, the rules got introduced way back in 1996 for the first time. At that time, the procedure was way more rigorous in two specific ways. One, the importer was required to have an interface with the customs as well as the excise authorities. The interface with the excise authorities was required for the purposes of certification of the goods procured, which were to be filed with the customs authorities. This process continued for a long time until in 2016, the certification process got diluted to a intimation process. Even though the jurisdictions remain the same, the importer had to file intimation both with the customs and the excise authorities. But in some sense, the relaxation from the certification process was provided under the 2016 rules. When the GST got introduced, the process of the jurisdictional the jurisdiction of the customs got the customs officer became the jurisdictional officer. And another important amendment was that the export oriented units were now required to comply with Rule 5 of the IGCR rules. In 2021, one more important amendment came in, which is that the job workers, whether the importers can import and send the goods under exemption to job workers, that was not entirely clear under the rules. That got clarified and with the amendment in the IGCR rules in 2021. Another process amendment improvement that came in was the capital goods were allowed to be cleared for home consumptions on depreciated value. This was definitely required because capital goods, even if the useful life of the goods got expired, even then, if there was the goods were being sent for home consumption, the importers were required to pay the duty on the full value. Now that anomaly was resolved in 2021 rules. Now, as we speak today, there are two aspects that are relevant, which are distinct from the earlier rules. One relates to the filings that the importer is required to make. The process is now going to be automated as opposed to the manual process which is being currently followed. And secondly, there are some certain other amendments introduced in the rules. One of the most important ones being the time limit has been prescribed under the rules for utilization of goods to 6 months. So prior to the amendment, the importer was filing a one-time prior intimation before the jurisdictional customs officer as well as to the customs officer at the port. I stand corrected. The one-time intimation was required to be filed only with the jurisdictional customs officer. And that required that prior intimation required the goods information regarding the goods to be imported and goods to be manufactured, the process to be undertaken, the bond that is required to be furnished, and the premises where the goods are to be taken. Once the one-time process is over, the importer is required to intimate the estimate quantity of the goods to be imported. Now, this process was to be followed vis-a-vis both the jurisdictional customs office as well as the customs officer at the port. Also, for the purposes of back-end verification, the customs officer was required to forward this information to the officer at the port. Once this whole process got complete, the importer was eligible to import the goods on availing exemptions or concession and filing bill of entry. with supporting documents. After the clearance of goods, there was another intimation that was required by the importer to be filed with the jurisdictional customs officer on the actual receipt of goods into the factory. And a quarterly statement was required to be furnished by the importers for the purposes of disclosing the receipt, utilization, or any other usage of the goods. Now, that was the overall procedure prior to amendment. Now, 1st of March onwards, the process looks like this. The one-time prior information that was being furnished to the jurisdictional customs officer by the importer now stands substituted with a automated form that is to be furnished on the ICE gate by the importer. That form is IGCR 1, part A of which needs to be furnished as step 1. Once that form is filled up, there is a unique identification number that gets generated for the importer, and based on that, the importer goes on to submit part B of the IGCR 1. The purpose of submitting for part B is to provide the bond details on the ICE gate. The physical copy of the bond will still be submitted to the jurisdictional customs officer. After this process is complete, the importers will be importing the goods and filing the bill of entry with the IIN that's disclosed, that's generated on the ICE gate, along with the bond details. And they can clear the goods to their premises. Along with this process, there are 2 other filings that are required from the importer. One, for any short receipt or non-receipt of goods, the importers will be required to file Form IGCR 2. And instead of the quarterly statement that we looked at under the pre-amendment procedures, now the importers will be required to file IGCR 3. That's a monthly statement to be filed by the 10th of every month. Let's look at the automation process in further details. So like I said, that for every importer now it's a requirement to file the prior information in IGCR 1 part A. When I say every importer, of course I mean only the importers who are governed by the IGCR rules. So they would go on the ICE gate, fill up part A of IGCR 1. Though those details are largely in the same nature as the one-time prior intimation that was being earlier filed, which would include the goods to be manufactured, the process to be undertaken, the premises where the goods are to be taken. One important aspect is that when we file IGCR 1, each premises where the goods which are imported and on which the concession of duty has been taken, wherever these goods are to be taken by the importer, for each premises, the part 1 of IGCR needs to be filled up. Once this information is filled up, the ICE gate will generate a unique IGCR identification number. Now, this number is tagged to the GSTIN of the importer. Once the information is filled up, that would be accessible both to the jurisdictional officer as well as the customs officer at the port. And it's the IIN only that will be the basis of filling the bond details, the IGCR 2 for short receipts, and the monthly return in IGCR 3. After the Part A has been filed and the IGCR and the IIN has already been generated, the importer will now go on to file Part B of IGCR 1. In this part of the form, the importer will be specifying the bond details, which can be later on amended or updated as well. At the same time, the requirement of filing the physical copy of the bond with the jurisdictional customs officer will continue. Once the form has been accepted by the jurisdictional officer, they will update the data on their portal, which will then become visible on the ICE gate for the importers. If the bond is already generated, no fresh bond is required as a consequence of the new automated rules coming into play. However, the customs officers will still enter the details of the bond, which will get reflected for the importers on their ICE gate portal. After IGCR 1 process is complete, the importers can file bill of entry specifying the IIN and the continuity bond number. These details get reflected for the jurisdictional customs officer as well as the officer at the port. And post that, the clearance of goods is allowed for the importer, debiting the bond amount. So that's how the procedure from 1st of March will look like. In addition to filing IGCR 1 and thereafter importing the goods, the next set of actions that are required, let's look at those. In case there is any short receipt or non-receipt of goods, the importers will need to file a form IGCR 2. Now, the purpose of filing this IGCR 2 is that there is complete mapping from the point of the quantity that is imported till it is utilized, and if there is difference on account of short duty or short receipt of goods, that can be matched. However, one of the aspects that need further clarity is that what would be the consequence that the department is looking at for disclosing the details of short receipts or non-receipts of goods. In two tribunal rulings, in case of Vijay Solvex as well as in case of Junjunwala Vanaspati, the tribunals have held that in case the goods have been imported by following IGCR procedure and the goods, there has been short receipt of goods, the duty differential needs to be paid by the importer. So that leads to the possibility that the information that is furnished under IGCR 2 is actually questioned as amount of the goods on which the duty concession is not eligible for the importers, and therefore they may have to go through the rigor of explaining why the duty is not applicable on such short receipts. Only in the times to come we will know the real consequences and implications of filing IGCR 2. But that being said, the process is clear in law, so all importers do need to make this disclosure in the requisite form. Once the goods are imported and received in the factory, the utilization of goods has to be now, as per the rules, specifically within 6 months from the date of import. This requirement was not specifically there under the rules earlier. There was a department circular which actually mentioned 6 months time limit for utilization, and now the timeline having become part of law, we look at how this can further impact the importers in the subsequent slide. The other compliance requirements for the importers is that they need to file a monthly return in IGCR 3, and that needs to be filed by 10th of the following month. Apart from that, the importers do need to maintain their accounts and records of, and these records are the quantitative details of the goods which are imported, and the utilization of those goods, the wastage, if any, if there is any short receipt. So the overall reconciliation of the goods received and utilized needs to be maintained, and which could be required to be produced on demand by the customs officer. So, like I said earlier, under the rules, specifically the timelines of 6 months was not mentioned, even though the circular did mention 6 months timeline. Now, essentially, 6 months timeline having become part of law, one definite consequence that is going to come for the importers is that if the goods are not utilized within 6 months, they will need to either re-export the goods or pay duty clearing the goods for home consumption. And in case they are going for re-exports, the re-export details need to be mentioned in the monthly statement. And in case there is the goods are cleared for home consumption, the duty with applicable interest needs to be paid. The date from which the interest will apply is mentioned in the rules is to be the date of import of goods. So if 6 months later the importers realize that they cannot utilize the goods for the intended purpose, they will have a consequence of 6 months interest on such unutilized goods. Now, that leads us to one unclear aspect, which is that what happens to the transitional stock. There would be stocks in hands for the importers which are already there, on which duty exemptions have been claimed. Now, on those stocks also, will the 6 months time limit will apply or not? That is a question that is not explicitly answered under the rules, nor under the transitional aspects covered under the circular or the advisory issued by the government. So, like we saw that the goods, if they are not utilized for the intended purpose, they can either be re-exported or cleared for home consumptions. In case of exports, the monthly statement that the importer will be filing will need to specify the shipping bill, the date, the value, etc. of the imported good, the goods which are re-exported. In case of clearance of goods for home consumption, the duty foregone will be repayable with interest, like we discussed in the previous slide. However, if the clearance is of the capital goods, the duty foregone will be paid at a depreciated value with interest thereon. Another aspect is that the ICGR process as of now does not provide for voluntary payment of duties. So whatever duties are to be paid by the importers on voluntary clearance of the goods will need to be paid by filing the TR6 challan. let's look at the job work scenario, how there are changes under the rules in such cases. So up until now, the importers do import goods, and when they send the goods, they need to file an intimation with their jurisdictional customs officers regarding the goods sent to job workers. So it's each time there is a movement of goods from the importer of goods which are covered under IGCR rules, the importer files an intimation with their customs office, and they send the goods under job work challan, which have to be received as per the rules within 6 months. Also, if the job worker directly receives these goods have to be, the job worker will need to file the intimation directly to their own customs officer. So far, if the in summary, if the importer is sending the goods to job worker, intimation is filed by the importer to their jurisdictional office. If the job worker received the goods directly from the port, they file the intimation to their jurisdictional customs office. Both these intimations now are done away with. So the documentation that will now henceforth follow is that, like previously, the importers can send the goods to the job workers under the cover of a delivery challan or an invoice, and if there is e-way bill applicability on such movements, the e-way bill also needs to be accompanied. One interesting point is that the rule specifically uses the term invoice for sending the goods to the job worker. And in the advisory issued also, the document mentions that the goods can be issued. So the job worker the process can be fully outsourced. Now, that leads to the question whether the whole process of contract manufacturing is also allowed under the IGCR rules. This is only by way of implication. If we look strictly read the rules, only the job work process is allowed under the IGCR rules. The implication whether the contract manufacturers are covered or not is only a derived implication due to the use of the term invoice under the rules. Like I said, the intimation is no longer required neither from the job worker nor from the importer. However, they will need to maintain the accounts and records as they were maintaining earlier. So the importer will need to maintain the accounts and records of goods sent to the job worker, and will also need to mention them in the monthly statements. The 6 months time limit that is mentioned under the rules, that was mentioned earlier under the rules, continues to apply. So the goods have to be necessarily received from the job worker's premises within 6 months, even under the amended rules. Now, coming to the accounts and records which are to be maintained, which are largely the same as earlier. So the importer is required to to maintain quantity-wise details of the goods which are imported, the date of receipt of the goods in the premises, the goods consumed for the purposes of manufacturing or providing services, as the case may be, the goods sent to job worker or received back from the job worker, any re-export of goods remaining in stock, or goods sent to any other unit. Now, these records may be required to be produced before the jurisdictional authorities on demand. The job worker is also required to maintain the quantity-wise details of the goods received, manufacturing process undertaken, if there is any waste generated, etc. this is, like I said, like almost similar to what was there in existence previously. So on an overall basis, the important aspects and action points for the importers are one, that importers need to file IGCR 1 for the units which are already covered under the IGCR rules, and the importers who know that their units are going to be covered for IGCR rules purposes, they need to update that process for their respective GSTINs. The transitional aspects covered under the circular and the advisory say that the previously followed process can continue up to March 13, 2022. Another important item for the importers is that they must ensure that their existing bond details get populated from the on the ICE gate by the customs officers. So there would be required some amount of rigor that the importers will need to apply, so that to ensure that their bond details are duly updated on the system. For the EOUs, as of now, the system architecture has not been implemented, so they will continue to maintain their currently followed process. There is no change for them. So let's look at a macro level what has really changed. To begin with, the manual statements and intimations that were being filed now get replaced with electronic filing of information in forms IGCR 1, 2, and 3. So that's the logistical or the shift at the automation level. The intimations that were being filed by the importers on receipt of goods are no longer required to be filed except if there is actual short receipt of goods. We discussed earlier that in case there is any short receipt, a form IGCR 2 needs to be filed by the importers. Up until now, the importers have been filing a quarterly statement of utilization, which now gets substituted with a monthly statement of utilization. Another important aspect we've covered is that 6 months time that was only under the circular earlier now becomes a part of the law and is likely to be followed with much more rigor by the customs authorities henceforth. The job workers were earlier, the goods that were being sent to job workers, the intimations with respect to them, whether it was being filed by the importer or in case the job worker is directly receiving the goods by the job workers, those intimations are also no longer applicable. These are the key changes in the IGCR rules compared to the ones that were applicable till 1st of March 2022. There are some of the aspects which remain still unclear. And now, in this last section of the session, we will be having a look at that. We've discussed that the IGCR 2, which is the form to be filed in case of short receipt, that form is to be filed on a real-time basis. However, the purpose of taking that information is that only for reconciliation purposes, or does the department intend to recover differential duties on such short receipts? That part is not clear. The impact, so whether the 6 months rule will apply on transitional stock, again, that part is unanswered under the rules or under the circular issued under IGCR rules. One interesting aspect when we go on to file the GST, the IGCR one, is that in case you need to fill your job workers detail, the system form says that the GSTIN of job worker is a mandatory field. Now, it needs to be only practically checked whether that field will can somebody mention not applicable in that field or not. On the face of it, it looks like that the importer will need to provide the GSTIN of the job worker also. So that leads to the question why that field is actually mandatory when it is not necessary under the GST law that all the job workers will be registered for GST purposes. Another open and debatable point is that whether contract manufacturing arrangements are governed by the provisions of IGCR rules and therefore the benefit is available in those cases or not. Couple of gaps from the perspective of compliance are: one, that the whole process does not talk about any rectification or amendment in IGCR 2 or 3. Now, so if there is any error that happens while filing information of goods in IGCR 2 or 3, will that lead to any? So can the importer now rectify, and if that it can be rectified, that needs to be seen. I hear a comment by Dheeraj Vora that Dheeraj, you cannot hear. Is that an issue with others? Komal, can you check? Can someone respond on the chat if you are able to hear me?
Poonam, you are audible to me actually. So let me just check with another system.
Okay, I got another response from Narayan that I'm audible. Okay, thank you. Okay, so coming back to the compliance aspects which remain unanswered, one, that there is no provision for rectifying IGCR 2 or 3. So if there is an error, what happens, that is not clear. Also, if there is no transaction in a particular month, will the importer still need to file IGCR 3? That is also, the rules are silent on that point. Interestingly, all the transitional provisions which are mentioned in the circular, there is no backing of them under the amendment rules. So this could another become a point of debate. One of the transitional provisions actually says that the procurement certificate can continue to be filed till March 13, 2022. Now, in practice, the process of procurement certificate has been dropped all long back. So why the transitional provision mentions procurement certificate, that part is unclear even to the field formations. And one final comment on this is that the process of voluntary payment and the system architecture for the EOUs is still to come into place. So there will be further processes that will be defined under the IGCR rules in the times to come, and we will need to revisit how those will get implemented on ground and what all is required to be done by the importers for those. So with this, we come to an end of the content part of it from our side, and now I'm happy to hear if anyone has a question. So I cannot pronounce this name. I think it says Udumbar. your question is there any provision under IGCR rule for destruction of goods into DTA? No, so there's no specific provision per se, and yeah, so no specific provision. In case, so we will need to double check once. In case there is anything, we will reply you back on your personal email. Any further questions? So Bhatt BC is asking rebonding from EOU to DTA whether stock of finished goods may be transferred against sale invoice. So Bhattji, this question is not part of the talk that we are having in today's webinar. But to answer your question, yes, when you debond, you can transfer the goods against a sales invoice. There's a question from Ashutosh. To whom should we recommend IGCR? I could not get your question. Can you make it a little bit more clear, please? The Udumbar again is asking, is there any provision for temporary removal of goods for repairing purpose to DTA? So temporary removal of goods is possible in Udumbar because the job work provision is there. So you can send the goods for the purposes of repair and under a delivery challan and get them back. That is possible. Ajit is asking, how is the scheme beneficial comparing to, I don't know what is the other scheme you are talking about, Ajit. IGCR system is not live. For example, notification number CTH is not getting reflected. Does anyone have generated IN? Even we tried to do that process, but for us it's not working. So yeah, there are challenges coming in. What do you refer to job workers? Sanjay Podar. This is question from Sanjay Podar. Sanjay, job work is a scenario where after import, the goods are sent to another manufacturer, another person who will undertake the whole or the part of the manufacturing process. This movement from the manufacturer, the original importer, to the person who's undertaking the process is not by way of a sale. So let's say A imports the goods and sends to B for finishing or polishing and gets the goods back. The process that is being undertaken by B is a job work process. Yeah, I got your comment, Kanaya. You mentioned that the Department Health Desk is saying that the system will take time to get live, and they mention a timeline of March 29 for the system to get live. So yeah, so that allows for some more time for people to get geared up to follow the process. I think that is all we have for today's session. And I see some people are still coming in with questions. Some of them are unfortunately not entirely clear. So I would request that you post your query, take your time, articulate it completely and share it with us. We will be happy to answer them back to you. So thank you very much. Over to you, Komal. I think we can, with this, complete the session.
Thank you, Ms. Poonam, for this insightful presentation, and I'm sure this has added to our knowledge on the topic. I appreciate the subject matter and thank you for precisely explaining it to the audience. I also thank the participants for being so cooperative. Thank you all for taking time out of your busy schedule and joining us in this session to make it a success. Though Ms. Poonam has tried to reply to the queries raised during this session, yet in case you have any further questions, you may please send them to us in writing at sales@taxmann.com. Thank you all once again. We shall soon be back with another vital topic. Till then, stay safe, stay healthy, and have a great time. Bye bye.